Welcome back to Crypto Hustle 101. In this video, I'm going to use technical analysis to evaluate Shiba Inu and Loopring to try to determine where price is heading. Now, the first question I ask myself when I'm evaluating an asset is, what's the current market condition? There are three market states an asset can be in. It's either in an uptrend, a downtrend, or a ranging market. An uptrend is going to look like this. You're going to see price go up to a high, retrace back down to a low, and then go to a higher high than the previous high and a higher low than the previous low. A downtrend in the market is going to look like this. Price is going to come down to a low, come up to a high, then come back down to a lower low than the previous low and a lower high than the previous high. A ranging market is going to look like this. You're going to have the bottom end of the range and the top end of the range, and price is going to oscillate back and forth between high and low, the top end and the bottom end of the range. This is also going to be called consolidation or moving sideways in price. And the interesting thing is that the market's going to range most of the time. The market is going to be trending or ranging. It's going to trend 20 to 25% of the time and range 75 to 80% of the time. And you can see that evident in how long it just ranged or went sideways until it got into an uptrend, another short sideways into another uptrend, and then a downtrend. And you can see how long the actual sideways actions was. It was pretty long. So let's take what we just learned and apply that to the Shiba Inu chart. Now, if we come over here, we can clearly see an example of an uptrend. Price rises up, retraces down to a low, then pushes up to a higher high, retraces to a higher low. Pushes up to a higher high, retraces to a lower low. Pushes up to a higher high, but then we have it come down, not to a higher low. It's actually below just slightly right there. What you can also do is you can use the Fibonacci retracement tool to help you determine if an asset's actually still in a bull run or not. If we start our fib right here and then come down, and then, all right, so we're going to go to here. Price went up to here and it retraces down to the 0.236. That's the first level that price is actually going to come to determine whether or not it's still a bull. If you see it go below here, it's going to start thinking more, well, do I want to come down, go sideways, or what? You also see it, let's move up to the next higher high, right here. Where did price retrace back down to? Back down to 0.236. If we go up to this next high, now we know, because we're looking back, the price actually started going sideways. But if you look here, price came down and went below this first checkpoint, and it came down to 32. Just like there's a long range, there's actually a range where price likes to continue uptrends from. The first stop is here, and then it's the point of no return is right here between 0.382 and 50%. Now, so you see now that what price did is it came down to a low, and it didn't make a higher high. But it also came down again and made another higher high here. So what we're seeing here is an example of consolidation or sideways action. We're seeing it going, this is the high, this being the low, and until it breaks either one of these, it's just going to go sideways in price. And we see here what happened. Price actually got past here, made a higher high right here, and we continued our uptrend up. Now let's move this over and continue what I was talking about. All right. Price came up to here, stopped, came down and checked where? 0.236. This stuff just keeps working. Go up here. Oh, move the wrong thing. Go up here to here. Comes back down to where? Straight back down to 0.236. All right, let's go up to the very end of the run right here. Just like before, price came down, low, came up a little bit more, lower low. And actually, if this stuff's hard to see, you can change it to a line chart, and that makes it a lot easier to tell. So right here, you can clearly see the uptrend, higher high, higher lows, consolidation going sideways. Up here, higher high, higher low, higher high, higher low, higher high, higher low, all the way up. And then once it came down and it checked to 0.236 and it closed below that, it came up, made a lower high. Not quite a lower low, it's still trying to make a decision, but it made another lower high. And if you remember from our previous video, let's go ahead and show that. Whenever you see the market smiling at you, it's about to take your money. And it was smiling right here. Once it broke over here, we had a pretty serious turn to the downside. And where did it come to? right into here. So right now we're in between the point of no return, trying to make higher highs, but it's not getting past here, and we're making lower highs. Not quite lower lows yet, but as you can see, we're in like a limbo. We're not quite sure where price is gonna go. So let me change this back to a candlestick chart. All right, so now what we have is prices here. We just got finished with an uptrend, trend reverse became a downtrend, clear downtrend, and now we're just going sideways in price action. So what we're looking to see is this price going to close below here? Because if it closes below here, what we're looking at is a situation where you're going to draw your long zone, which is between here and here. Let's change that back to what it's supposed to be. Make that green. All right, so right now this is your long zone. So price is looking to see if we can stay above this 50% line. And if we close below there, you're going to see it close below actually this low right here. We're pretty much headed all the way down to here. So, and you can actually take a look at the thing that everybody was on fire for before, Dogecoin. It pretty much took the exact same path. What happened? Consolidation, higher high, higher low. Higher high all the way up to here. This is actually a day chart. It would look more similar if I put it on the 4 hour like the previous chart, but we got the same situation going. Price made a lower high here, and once it broke here, it went straight down, made another lower high, down some more, and now we're in consolidation right here, with this being the top of the range and this being the bottom of the range, trying to determine where it wants to go. So I know everybody wants to believe, and if you take in consideration that somewhere back in here, that was supposed to be Elon Musk's big Saturday Night Live, what do they call it, an event that's going to make price go to $1. It didn't. And if you go back to Shiba Inu, right now, what's everybody talking about? They're talking about the Robinhood listing, and they're swearing that once that hits, everything's going to go straight to the moon. I mean, you can just take a look at previous situations. It didn't work with Doge. It's not just going to come up out of the blue for Shiba Inu either, probably. And also, if you let's zoom out. This is actually the 4 hour chart. If you zoom out to the daily chart, it looks even worse. We got a situation where we're seeing continuous. Let's change it to a line chart. So the bigger the time frame, the more stronger the signal, and we got nothing but low, lower high, lower low, lower high, lower low, lower high, and now we're consolidating. But if you start looking at other things like other indicators, like say MACD, does that look bullish to you? This doesn't look bullish to me. So in my opinion, there's a chance we can double. We got to start making higher highs. Prices got to come up above here. All right, start closing above there. Then make a higher high here and try to change the trend. Until that happens, odds are we're coming down into this area right here. I know nobody wants to hear that, but charts don't lie. So, and that's the situation with that. I also want to take the time to address the term that people say called buying the dip. Now, when people are new to trading, the first thing they tend to gravitate towards is the easy to remember slogans like, paper hands, diamond hands, buy the dip. Like when I was new, that's the first thing I gravitated towards. But what they didn't tell me is that you want to buy dips or retracements in an uptrend. If you're buying, here, you bought here, it goes up to here and then it retraces back down to this here. You want to buy this dip in a verified uptrend. Buying dips in a downtrend is an easy way to get in the red and stay in the red. And that's what people are doing because you're hearing about it here. Everybody's excited. We're talking about the moon here. And it comes down below the 0.236 and it starts making lower highs and it goes down to lower low and you're buying the dip. And then it goes down further. You buy that dip. Goes down further. You buy that dip. Goes up to here. All right, it's going to all pay off. Nope, we're back down here consolidating. And we have no idea how long that's going to last. So instead of you got to understand what's a good dip and what's a dummy dip. In an uptrend, and when you actually verify it with the Fibonacci retracement tool that you're hitting this 0.236, those are smart dips. Over here, these are dummy dips. Don't get caught up in that. I just want to take the time out to say that, and just in case people keep hearing this same term All these terms like diamond hands, paper hands, it's just things that people say when they really don't have a good grasp of what the market's actually doing. And it's easy to repeat these to other people and make it sound like they know what they're talking about. But after looking at this, you understand and have a deeper understanding of what it is you're actually looking at and how the market actually works. That's actually my whole point or purpose to doing this video. Okay, so now let's take a quick look at the Loopring chart. All right, at first glance, I can already tell right here, if I wasn't already in this asset, I'm not looking to start a position here. But let's use the Fibonacci retracement tool and still go through the process. All right, let's draw right here. All right, you look, when you started going parabolic, what happened is it came up to here, closed here, and then came back down to the 0.236 before going up higher. Let's go to the next level. All right, now, once it closed here, it came back down, went past the 0.236, past the 382, and then turned around inside the zone where you're looking for it to either come back down into here or continue the uptrend. And it continued the uptrend, as we can see. All right, come to here. Where'd it come down to? Down to 0.236, continue the uptrend. So now our peak is up there. We see it's closed here, then came down, check 0.236, came over another day, but then it came back below it, and now we're down here, trying to determine where we want to go. But all I can see right now, we're starting to make lower lows. All we got to do is make another lower high, and then the downtrend is in. Or it may come down to here and decide to go sideways. Either way, given what we already learned, right now this is not a place where anybody should be looking to buy dips or try to start getting a position opened. So after watching this video, hopefully now all those FOMO to the moon millionaire Shiba videos seem a little less credible, and you're starting to realize that the self-proclaimed experts with little to no understanding of technical analysis or fundamental analysis are not the guys you should be looking to for price prediction videos. And the funny part, there's actually a new technical analysis technique that can help you find the top before it happens. Let's use the replay button and I'll give you a quick preview of what I'm talking about. Replay button. Let's go back here. All right, so replay button. Let's go ahead and hide this. So if you take the Fibonacci retracement tool and you customize it, and you start at the top here, let's go into settings. I already have an actual preset made for it. Okay. And you go to the bottom of the range here. All right, and then go to the top of range here. Now there should be no way that these price hasn't gotten here yet, so there should be no way for me to predict where we might see resistance. But let's hit play and see what happens. All right, heading up. Still going sideways, consolidating, up, starting to go up. It's going parabolic. See where it stops. All right, let's go ahead and close there. All right, as you can see, it went straight to here and no mas, did not go any further. And I was able to find out this possible resistance level before price got there. And that's what one of the newer TA techniques that I've learned over the summer. But that's just a preview, and I've been actually using it all summer. And I've been using it, like, say, for example, in the Chili's chart. I drew it here, and I was able to know the resistance before it got here. And now came back down, consolidated, and came up to here again. So there's a lot of things you can learn once you get a good foundation and start digging deeper into TA and FA to try to determine something other than just, your gut feeling. You got actual fundamental things and technical things to back what you think may happen with price. And the more you learn, the more you can start doing that stuff. And then you might throw this in here. You can see how price is actually, with this GAN box, how this is actually reacting to this. I also have it, I reverse it, go this way. It shows me how a price may react as it goes forward. So it's just a little preview, things you can learn. They're out there, but in order to learn them, you got to stop just continuously looking at the videos that are going to tell you, hey, how to be a millionaire with this without, people like to talk about the whole Mamba mentality. Well, the Mamba mentality also went with a crazy work ethic, and he practiced all the time. So that's going to be it for this video. See you guys next time.